A few weeks ago, Fundrise announced that they got $300 million in support from one of the largest, yet the most corrupt and controversial investment bank out there, Goldman Sachs. Is this good news for Fundrise? Coming up. If you're new to the channel, my name is Trey, and I'm a real estate, stock, and crypto investor. I'm also a swing trader. If you enjoyed this video, please make sure to click that like and subscribe button and check out my entire Fundrise and swing trading playlist down in the description below. Now let's get started. Okay, so here's an actual article published on September 26, 2021. And it was published by Wall Street Journal. The name of the article is Goldman Sachs backs Fundrise's single-family rental fund. So I'm just going to highlight a couple of things in the article. The first thing that this article says is a startup that wants to open up the single-family home rental market to small investors is ramping up its home purchases after winning the backing of Goldman Sachs Group. Now, the first thing that I don't like right off the bat about that first sentence is that it says a startup. So this article refers to Fundrise, our platform, as a startup. Wall Street Journal, maybe you should do your research. Fundrise has been around since 2011 and 2012. That is over 10 years in existence. That is hardly a startup. And as you know, the rule is that if the company survived for the first 10 years, it will survive for the next 10 years. Next thing, it says that Goldman Sachs last week provided a $300 million credit facility to Fundrise, the startup said. The deal comes as more financial firms scored individual investors. And then it goes on to talk about Robinhood. Now, I kept on reading that sentence. Goldman Sachs provided $300 million credit facility to Fundrise. So I was reading it and I was wondering, what the heck is a credit facility? They did not say that Goldman Sachs provided a $300 million loan. So I went to do some research and I have actually found out what a credit facility is. So I found this thing here and it explains all about what a credit facility is and what it does. So essentially, it is a type of loan. However, it's not a traditional loan like everyone is used to. Traditional loans is, let's say you go to the bank and you say, I need to borrow $300 million, and the bank gives you these $300 million, and then you start paying certain interest right away on that $300 million. However, a credit facility works more like a credit card. So what it does is that it gives you a loan, let's say a $300 million loan, but you do not pay interest on that loan right off the bat. In fact, you don't even have to use that money right away, and you will not have to pay any interest in it at all. You will only start to pay interest on the portion that you used once you used it. So for example, you obtained this credit facility for $300 million and you decided to purchase a $100 million rental complex. So you use that $100 million out of that $300 million, and only at that point will you have to start paying interest and pay back the money to the lender, which is Goldman Sachs, and you paid only on $100 million. You do not paid on the other $200 million, which are still sitting there waiting to be used. So that is what a credit facility is. It is a very good type of loan because it decreases the amount of money that Fundrise ultimately will have to pay back in interest, and it allows Fundrise to take their time in purchasing the proper single-family rental units instead of just taking $300 million and putting it into something else because they have to, because they wouldn't want to let that money sit around and pay interest on it. So it's a very flexible type of loan that lets companies make educated decisions in what to purchase without having the pressure on using all the money right away. So what will Fundrise do with these $300 million? So if you scroll down here a little bit, you're going to see that it says the Fundrise plans to use the credit facility to finance the single home rental purchases. Now, I believe that the backing by Goldman Sachs of Fundrise is good. Even though Goldman Sachs has its controversies, but ultimately it's one of the biggest investment banks in the world. And, before they loan money, they do their research. So that means Goldman Sachs went over the financial statements, they did their analysis about Fundrise, and they looked at the strategy that Fundrise utilizes in purchasing their real estate. And they really liked it, and they believe that Fundrise will be able to repay with interest these $300 million. Obviously, Goldman Sachs wouldn't lend this money unless there was a collateral, and obviously the collateral will most likely be the real estate that Fundrise purchases. So in case they default on their loan repayment and interest payment, Goldman Sachs will acquire those properties. But in general, I think this is good for Fundrise. I think the backing by Goldman Sachs will turn the eyes of other big investment banks. They will start looking at Fundrise, and you're going to see Fundrise making many more connections with other investment banks and getting some sort of loans from other investment banks. And obviously, the more money that Fundrise will be able to borrow, the more real estate they will be able to purchase. And of course, if their strategy keeps working like it has been for the last 10 years, the investment banks will get paid and us as investors will get paid as well. This is also great news, because something like this, a partnership or a backing by a big investment bank, is another one of those reasons that I think Fundrise will be going public in the next 2 years. Now, as much as I like this news development, I just want to let everybody know why I think that Goldman Sachs is one of the most corrupt and controversial investment banks out there. So all you have to really do is type in Google Goldman Sachs corruption, and this is what you get on Investopedia. Now, I'm not going to go over this in detail because there's just so many things, but there's so many news sources and there's so much evidence that shows that Goldman Sachs actually played a big part in 2007 and 2008 financial crisis. They were literally found guilty in giving out subprime mortgages. They would give out mortgages even though they knew that based on your income and how much money you have, you wouldn't be able to repay that loan. So those are called subprime mortgages. And as you could see over here, they settled for $60 million. So over here, Goldman Sachs agreed to pay up to $60 million to end an investigation by the Massachusetts Attorney General. Now, guys, it sounds like a lot, $60 million, but think about it. For one of the biggest investment banks out there, $60 million is like a drop in the bucket, right? For example, would you pay $60 million to make $2 billion or $3 billion? For Goldman Sachs, the $60 million in penalties is just the cost of doing business and nothing more. To us, to regular people, it sounds like a lot, but to them, it's pretty much nothing. A couple of other corruptions of Goldman Sachs over here: stock price manipulation. So for example, Goldman Sachs was charged, which means they were found guilty, for repeatedly issuing research reports with extremely inflated financial projections for a stock market. So again, manipulating the stock market, telling people one thing, in fact they know that it's a completely different thing. Again, over here, Goldman Sachs settled with Overstock for $20 million for participating in abusive practices described as fake lendable shares. So what happens sometimes when you trade stock? For example, when you're on Robinhood, you buy a stock, you hope it goes up. That's being long a stock. Now, when you're shorting a stock, you buy a stock but you hope it goes down. However, you cannot just buy a stock and hope it goes down, because you actually would lose money. So what happens is you need to borrow shares from a broker, and then you immediately sell those shares, right? So you borrowed a certain amount of shares, you sell those shares at a high price. Now, because you borrowed these shares, you need to give them back to the broker, right? So once you sell them, you try to sell them at the high price, then you hope that that price goes down, and then you buy the amount of shares that you borrowed at a lower price. So what happens is then once you buy those shares, you give it back to the broker and you keep the difference. So again, what they were doing is this. So in order to borrow shares, the broker actually needs to have those shares. But what Goldman Sachs was found guilty of is that they were making it up, that they had shares, and they were giving and lending people out shares that didn't really exist. Right here, use of offshore tax havens. So for example, a 2016 report stated that Goldman Sachs reports having 987 subsidiaries in offshore tax havens, 537 of which are in the Cayman Islands, despite not operating a single legitimate business in that country. So the group officially holds $28.6 billion offshore. So guys, do you think the $100 million or $500 million that Goldman Sachs paid in penalties actually does something to the company? It hurts them financially? No, because just offshore they have $28.6 billion, which they don't pay taxes on. So you can imagine how much more money they have all over the world that no one knows about. And the United States government fines them $100 million, $500 million. That's nothing. And at the end of the day, the government and the investment banks, they're really on the same side. And it's just the cost of doing business. I hope you enjoyed this video. Please click that like and subscribe button and check out my other Fundrise, investing, and swing trading videos down in the description below. Thank you so much for watching, and I'll see you in the next video. Take care.